When it comes to your finances and your income taxes, the end of the year is a great time to reflect on the progress you've made this year, but oftentimes it's also a time to act. Because once December 31st passes, many of the best opportunities to reduce your tax bill and boost your retirement savings pass with it. So today, we're walking through the key year-end tax and wealth building opportunities you should know about and how to make sure you're taking full advantage of them before December 31st. Hi, I'm Joseph Eshelman, President of Towerpoint Wealth. We're a fully independent fiduciary wealth management firm headquartered in Sacramento, California. And here at Towerpoint, we instill confidence and empower our clients to grow and safeguard their wealth with thoughtful, strategic financial planning that replaces last-minute decision-making with more intentional, longer-term planning. The first year-end strategy we want to zoom in on is maximizing your tax deductions. So when it comes to taxes, timing matters. If you want to lower your taxable income this year, there are several powerful moves you can still make before December 31st. Charitable giving is one of the most effective. Whether you donate cash, appreciated securities, or use what's known as a donor-advised fund, your contributions can reduce your taxable income and support causes you care about. And starting in 2026, even non-itemizers will be able to deduct certain charitable contributions up to $1,000 for single filers or $2,000 for couples. So it's a good time to start building that habit now. And you can also bunch your charitable deductions, combining 2 or 3 or even 4 years of future contributions into one tax year to get the deduction. This allows you to move above the standard deduction threshold and maximize your charitable deductions and income tax savings. Additionally, if you have unreimbursed medical, education, or business expenses, make sure they're documented and paid before year end to qualify for this year's deduction. The next strategy is to maximize your 401k contributions. Your 401k is one of the most powerful tools you have for both retirement savings and tax reduction when it's used to its fullest potential. For 2025, the contribution limit is $23,500 plus an additional $7,500 catch-up contribution if you're age 50 or older. Every pre-tax dollar in earnings you contribute to a traditional 401k reduces your taxable income today, while your investments grow tax-deferred, typically for many, many years into the future. And if your employer offers a match, you don't want to leave that free money on the table. To make sure you hit the maximum 401k contribution before the deadline, check your payroll settings now and adjust your deferrals if needed. Even small increases can make a meaningful difference both in reducing your tax bill and building your longer-term wealth. Now, beyond your 401k, it is the time to make sure that you're making the most of your other saving and investing vehicles as well. If you're eligible, a Roth IRA offers tax-free growth and tax-free withdrawals in retirement, making these accounts another one of the best longer-term investing vehicles available. While Roth IRA contributions don't lower your taxable income today, they can significantly reduce your taxes down the road when you do begin making those tax-free withdrawals. For those who expect to be in a higher tax bracket in retirement, shifting some savings into Roth accounts now can be a smart move. And if your income is too high for direct contributions, you might consider a backdoor Roth strategy, where non-deductible contributions to a regular IRA are later converted over to a Roth IRA. Message us now for more information about how backdoor Roths work. And don't forget about health savings accounts, or HSAs, either. If you're in a high deductible health insurance plan, HSA contributions are triple tax advantaged. They're tax deductible on the way in, they grow tax-free, and withdrawals are tax-free for qualified medical expenses. All of these options can comprise your broader retirement savings contributions, and maximizing them is key to building long-term financial independence and potentially lowering your current or future tax bill. Once you've made sure you feel confident in your retirement contributions, there are more strategies that you can use to reduce your tax liability. As discussed, charitable giving is often one of the most fulfilling. So beyond the typical year-end donations I mentioned earlier, now is the time to consider strategic tax and charitable vehicles like donor-advised funds, which allow you to contribute now, claim the deduction, and then distribute funds to charities of your choice over time. If you're over 70 and a half, qualified charitable distributions, or QCDs, from your IRA can also be a great tool. They count towards your required minimum distributions but are excluded from your taxable income, effectively letting you give and save on taxes at the same time. Here at Towerpoint Wealth, we help clients ensure their giving and philanthropic intent aligns with both their financial plan and also their values, so their generosity is empowered to create a lasting impact. The most important thing to remember is that these moves don't exist in isolation. Your tax deductions, your 401k, any Roth contributions, they all work together as part of a coordinated strategy. Our role at Towerpoint Wealth is to help clients align these pieces by integrating tax planning, retirement strategy, and investment management into one coordinated plan. Because we know that true financial confidence doesn't come from reacting. It comes from preparing and proactive planning. The end of the year, it can be hectic, but a few proactive financial moves now can help you save on taxes, maximize your contributions, build net worth, and start the new year from a stronger economic position. If you'd like to review your year-end opportunities and ensure that your plan is optimized for the new year and beyond, we invite you to schedule a 20-minute Ask Anything conversation with our team. Thanks for watching, and remember, please like this video if you've enjoyed it, and subscribe to the Towerpoint Wealth YouTube channel to stay connected with us for more timely and smart financial insights. Thank you, and we'll see you next time.